Hey tech enthusiasts, welcome to the Friday edition of Tech Stocks Daily. Today we're diving into Alibaba's thrilling AI showdown in China and its surprising venture into healthcare tech. You're in for a treat as we explore Microsoft's intriguing financial game plan and their ongoing cloud saga. Plus, we untangle Google's position in the AI upheaval and their battle with looming regulatory hurdles. Whether you're into jaw-dropping tech advances or strategic market plays, this episode is packed with everything you need to catch the pulse of today's tech giants. Let's get started. Today in the tech world, Alibaba made headlines in a couple of interesting ways, with news that gives us a fresh look at this Chinese e-commerce juggernaut and its current strategies in the ever-evolving tech landscape. Firstly, Alibaba Group Holding is in the limelight due to its role in the price war in China's AI industry. Remember how in the old Western movies the two cowboys would meet at high noon for a deadly duel? Well, replace the dust and tumbleweeds with servers and code, and you've got the current scenario between Alibaba, Baidu, and DeepSeek in the arena of artificial intelligence. Baidu recently declared they're pulling the ultimate bargain hunter move by slashing prices on their AI products like Ernie 4.5 Turbo and Ernie X1 Turbo by up to 80%. This kind of sale doesn't just tickle the fancy of frugal shoppers. It's a strategic maneuver in the showdown with Alibaba and DeepSeek. In this AI standoff, Alibaba isn't just playing defense. They're capitalizing on their massive infrastructure and dominance in the cloud services market, enjoying the throne as China's largest cloud provider with over 1/3 of the market. Of course, they're leveraging this position to push forward with their AI advancements and integrations, keeping Baidu's maneuvers at bay. But there's more. Alibaba's prowess not only lies in offering competitive AI solutions, but also in innovation. Check this out. Their Demo Academy has clinched FDA breakthrough status for the Demo Panda, an AI-powered cancer detection tool. That's right. Alibaba's tech isn't just duking it out in the digital world, but making waves in real-world applications that could save lives. This major recognition reflects Alibaba's efforts to straddle market competition, while also expanding into sectors that hold transformative potential for society. And if that's not enough to whet your tech news appetite, Alibaba has an impressive growth milestone to share. The company's Quark AI app surpassed ByteDance's Dubao, capturing 150 million monthly users by March of this year. If Quark AI's user base sounds like you'd need a stadium the size of several small countries to fit them all, you're not far off. This signals Alibaba's endurance and adaptability in the app sphere, competing against formidable adversaries like ByteDance. While the AI price wars underscore a highly competitive landscape, Alibaba's strategic positioning, market diversity, and commitment to innovation are all paving paths of opportunity. Whether value investing enthusiasts are settling into a more aggressive stance or growth chasers are watching with bated breath, there's ample excitement surrounding Alibaba's stock. From AI battles to breakthroughs, Alibaba is cemented at the heart of today's tech milieu. Keep an eye on this titan as they keep redefining the boundaries of what the e-commerce company can mean in this tech-fueled era. All right, folks, let's dive into the Microsoft hype train today and see what's been sparking all the digital chatter. Microsoft has been making waves with an interesting combo of industry analysis and some juicy Q3 fiscal 2025 earnings expectations. So grab your virtual popcorn and let's break it down. Firstly, we've got Microsoft standing tall in the software industry, flexing some serious financial metrics against its competitors. A recent in-depth comparative analysis showed that Microsoft's price-to-earnings ratio is comparatively lower than the industry average. This tells us that Microsoft stocks might actually have some room to grow, potentially spelling good news for existing shareholders or those looking to jump on board. However, there's a twist. Microsoft's price-to-sales ratio is higher compared to its peers, hinting that based on sales, the stock might be a tad overvalued. Ooh, juicy. But wait, it gets better. Microsoft's return on equity, EBITDA, and gross profits are all painting a pretty picture of operational efficiency and profitability that you can't just slide under the rug. However, the sprinkles on the tech cupcake are a bit sparse this round, with a revenue growth rate trailing behind the industry average, a hint that our favorite tech giant might need a little caffeine shot for future anesthetic-defying sales boosts. Now, let's pivot to the exciting bit. Microsoft is right in the midst of teasing us about its upcoming Q3 fiscal 2025 earnings. As the financial wizards over at Zacks are whispering, things are looking lit with projected revenue growth shining at 10.55% from this time last year and earnings poised for an 8.84% bump. However, this isn't Hogwarts. There's no assured magic earnings beat this time around, as the predictors aren't lighting up in favor of Microsoft surprising us with extra coinage. Why should tech lovers care? Microsoft emerges as a cautious tale of watchful waiting. Sure, Azure's doing a happy dance with anticipated eye-popping revenue growth in the 30% ballpark, but cloud competition is fierce and not one for the faint-hearted investor folk. There's talk of headwinds from Amazon and Google potentially turning a gentle breeze into a tech gale. So, Microsoft, while sturdy and reliable, suggests the market fable of look before you leap. But don't pack those hopes away just yet, as Microsoft's strategic angles with AI and robust balance continue to dazzle even the stock market skeptics. So Vlog Squad, grab your popcorn machine because we're going to be watching closely as Microsoft sails through this revenue river and industry sea. Whether you're a shareholder or just here for the tech drama, Microsoft has possibly grabbed our attention with strategic undercurrents beneath what seems to be just another competitive day in the tech landscape. Stay tuned because the saga of those Redmond wizards is far from over. Today, Google is grabbing the headlines as analysts and industry experts weigh in on the company's future in the evolving AI landscape. At the crux of the conversation is whether Google, officially known as Alphabet Inc., can pivot successfully in this AI-driven era and manage risks surrounding its current position as a tech giant. First, let's talk about Alphabet's current valuation situation. Alphabet's stock is looking particularly attractive at the moment, boasting the lowest forward PE ratio among the so-called Magnificent Seven tech stocks. What's driving this? Investors are concerned about competitive pressures from rapidly evolving AI technologies like OpenAI's ChatGPT. Alphabet, once the undisputed champion of internet search, now finds itself in a duopoly turf war with new AI players shaking up the industry. But Google is countering this revolution by embedding AI into its own Google search, introducing features like AI overviews, which are being used by over 1.5 billion users worldwide in over 15 languages. The company's investments in Google One bundles, Google Lens, and the conversational AI bot Gemini underscore its strategic adaptations. Yet, questions about future growth persist. Industry expert Gene Munster points out that while these AI overviews stabilize business in the short term, their ability to revolutionize monetization is still uncertain. Sales from AI-driven products aren't quite yet boosting the bottom line significantly, even though they hold much potential. Will Google struggle to maintain its dominance as it navigates through technological disruptions much like eBay encountered in the competitive e-commerce scene? Or will it innovate like Amazon and consolidate its prowess? It's not just AI competition causing investors to double think. Alphabet is currently embroiled in monopoly lawsuits, primarily due to its advertising exchange and Google search activities. The outcomes of these suits could reshape how Google interacts with other tech giants and manages its vast reach around the world. Moreover, looming tariff risks continue to stir up uncertainty. Financially, Alphabet posted strong results with first quarter revenue hitting $90.23 billion, a 12% increase, outdoing Wall Street's expectations. As these figures indicate, Alphabet has shown its resilience and ability to innovate, but it remains to be seen if these numbers are enough to offset the pressures from AI competitors and regulatory hurdles. We're thrilled to hear what you think about Google's future. Do you believe Alphabet can maintain its edge as a tech leader in spite of AI competition and regulatory challenges? What's your take on its evolving product lineup and strategic innovations? Dive into the comments and share your thoughts. Let's get the conversation going. All right, folks, let's talk about Alibaba today and consider if it's a stock you might want to hold, sell, or scoop up more of for your portfolio. Remember, this is just my take, and you should always dive deep with your own research or consult with your financial advisor. In the bustling ways of Alibaba, we're witnessing some major moves involving price wars in the AI sector, groundbreaking advances in healthcare tech, and impressive user growth in certain apps. The company is flexing muscles not only in its core e-commerce and cloud space, but also venturing deeply into AI, both competitively and innovatively. What I'm seeing here is a company that is well-positioned amidst fierce competition. Alibaba's strength as China's largest cloud provider gives it a substantial foundation to leverage its AI ambitions against local rivals like Baidu and DeepSeek. That gigabytes upon gigabytes of infrastructure isn't just for cool points. It's the base on which Alibaba can continue to innovate and expand beyond traditional e-commerce. Then there's the FDA breakthrough for the AI technology in healthcare. This is not just a feather, but distinctly an eagle's wing in Alibaba's cap, showcasing their potential impact beyond digital realms into meaningful, life-enhancing tech solutions. Moreover, capturing a substantial user base with the Quark AI app is not just noteworthy, it's a signal that Alibaba plays the longevity game well, especially in tech's app battlegrounds, claiming the high ground over ByteDance. So here's my hot take. Baba is looking like a buy if you believe in its ability to continue competing successfully in both AI and e-commerce while expanding into transformative tech avenues. These moves present opportunities for growth and diversification, a tantalizing combo for investors with an appetite for both innovation and multi-sector influence. However, keep those investment radars tuned. Consider the market and regulatory risks inherent with a global powerhouse like Alibaba, especially in the current geopolitical climate. There it is, but remember, this is just one electronic rabbit hole you might want to explore further. Don't latch onto my excitement without launching a little investigation of your own or talking it out with your trusty finance advisor to see if Baba fits snugly into your investment narrative. Happy jumping into the world of tech holdings. Let's cap off the day with a quick market wrap-up, shall we? Alibaba is headlining with immense finesse, battling it out in China's AI arena while making strides in healthcare tech and app growth. Microsoft's financial savvy and strategic plays in AI are keeping us intrigued, though they're facing some cloud competition gusts. Then there's Google, flexing AI muscles in search and grappling with its valuation amidst regulatory pressures. So whether you're into AI battles, fiscal fireworks, or just a good old tech rivalry, there's plenty of action today. If you enjoyed the scoop, smash that like button, subscribe for more sizzling tech updates, and share the vibes with your fellow tech enthusiasts. Don't let the weekend slip by without channeling that tech enthusiasm my way again on Monday. Until then, have a fantastic weekend.